Hey, good morning. It is 6 a.m., half an hour before the market opens on January 8th. It's the first full week of trading this week, so traders should be back in full force. But we're really going to be looking for a major catalyst before we see a lot of movement. That major catalyst probably isn't today. We'll take a look at the economic calendar first and earnings, but generally the week doesn't start off with huge reports. So we'll take a careful look at that in just a moment. Right now we see the S&P 500 that is up basically zero. The Nasdaq is up about 0.15%, and the Dow is down actually 0.35%. So the Dow is down not insignificantly. It is just the Nasdaq is a little bit up, so the S&P 500 is flat. So the only one that is non-random is this Dow, and it's downwards. So basically, it feels like we're playing catch up, because in the S&P 500 last week, we saw that we broke down below that EMA 8, and then we actually went a little bit below the EMA 20, and then we kind of had a little bit of a hang up, a little bit of a indecision right here. So we really need to see what those major catalysts are going to be this week to see if we're going to start moving down, or we might actually hold at this EMA 20 level. If I look at QQQ, it was very similar, except we broke through the EMA 20 level, and right now we're basically in no man's land, and we were getting a tiny bit of chop sideways. So that's really reflecting the indecision as the big traders come back. They're looking for the new stimuli in the markets. And if we can't really find any, then there's just going to be this sideways motion until we actually get one. So the Dow Jones, though, we only came down to the EMA 8 and went sideways. So today is just catching up with the S&P 500 and the Nasdaq and moving down towards that EMA 20. So we're probably not going to see a lot of motion in the indices other than the Dow Jones today, unless we really do see a stimulus. So let's start looking for that. Let's go into our economic calendar and see what we have for this week. So Mondays generally very light. Basically, we have a Fed speaking, nothing too exciting or major there. Tomorrow, international trade in goods or international trade, goods and services. So probably not going to be huge, major market moving event. Petroleum status report. Here we go. CPI, PPI. These are going to be what dictates the market for this week. So since they're coming towards the later half of the week, we're not going to expect a lot of movement or a lot of volatility the front half, unless there's some major movement, some major play in, for example, the bond market or in earnings. Actually, we have earnings season starting. That generally starts with the financials. And let's see what we have coming up this week. Okay, so we have Bank of America, we have Albertsons, Bank of New York Mellon, BlackRock, Citigroup. So a whole bunch of financials coming out. Delta Airlines, Jefferies, JP Morgan. We have KB Home, so a little bit of the home builders. We have Pepsi. So a couple of consumer staples here and there. One healthcare, and quite a few number of financials, and that'll continue into next week as well. So it looks like that we have basically interest rates. Interest rates are going to be on watch. The financials will tell us how well the interest rates are being absorbed and affecting our banking system, which will trickle out into the rest of the economies. But for the most part, it should just come down to bonds and inflation. So we'll get that towards the end of the week. Bonds, we can see Now we only have a 4 or about 5% chance of lowering rates in January. You can see that came from down from almost 18% just a week ago. So the bond market is finally starting to get the memo that, hey, we're probably not lowering rates nearly as fast as we had been pricing into the market, which means that the bond prices are dropping, and that is dragging down the equity indices. So we'll see that after we look at March. March, we're now currently priced at about 63, 64% that we're going to have a rate hike in March, or sorry, a rate cut in March. But on Friday, we were at 68%. A week ago, we were at 90%, almost 90%. We were at 88.5%. So we're really starting to get that memo. And in TLT, you can see that we peaked out and we had a pretty sharp drop into that EMA 20 and the MA 200. That didn't hold on Friday. We came straight down through the EMA 20 and we're headed lower towards that MA 150 or MA 50. And you can see that this is pretty much a mirror reflection in QQQ. We came down pretty sharply, hit the EMA 20, broke through it, and we're kind of in no man's land between the EMA 20 and MA 50. The only difference is that MA 200 was also up here in TLT. So TLT really is dictating the market right now. There's no reason for us to believe it's just going to hang out here in no man's land, except for maybe we do have a little bit of horizontal support right here. Okay. Nice. So, but it looks like we have a little bit more room to fall before we reach this horizontal support. And then we'll see if we keep moving straight through it, then we'll hit that MA 150, which means that the S&P, well, mostly the QQQ will get dragged down. The QQQ will drag the S&P down, and then we'll see what the Dow Jones does. If we get that flight into safety into Dow Jones, or if we just get a general exit from the equities markets. So for now, we are looking at that downward bias. It doesn't mean that we're necessarily going to get immediately movement downwards today, tomorrow, or Wednesday, but it's looking pretty likely. The only thing that might save us from this downward motion is if the PPI and CPI numbers come in and they're really, really good. CPI has just dropped tremendously, and that would be stimulative for the markets, right? The only other thing that maybe is if earnings are amazing, that we beat everything that forecaster or cloudy skies ahead, everything is going to be soaring. That's the only other reason that we might bounce from these. And I really think it would have to be a combination of both, because we need to have the picture of what's happening in inflation match what's happening in earnings. And for us to hit all three, the CPI, PPI, and earnings look to be super golden. Basically, nothing can go wrong. Everything has to be amazing and beautiful. Everything has to go perfectly right. So if anything is a little bit off, we're probably going to continue to see the TLTs move down and drag the equity indices down with it. In terms of day trading, I wouldn't expect anything too different. Well, I'm going to put my foot in my mouth. There was a bit of volatility last week, so I wouldn't expect a huge amount of volatility the first 3 days of this week. We've got these senior guys, the most senior guys in the trading markets. They'll be back today. They'll be getting a feel for where everything is. And unless the junior guys really mess something up for them, then they're not going to need to do a lot of rebalancing and moving things around. So for the most part, I'm not expecting a huge amount of volatility. Volume should start to come back, but not real volatility unless there's a stimulus. And there's no stimulus in the economic calendar, and not really in the earnings. If I look today, yeah, there's not much going on today. And let's see tomorrow. Tomorrow more, but we have to see if it's before market or after market. So most of it is after market. The ones that are below Pepsi is pretty major. So we might see a little activity is more towards the later half of the day, but I wouldn't expect a huge amount of volatility until then. And we're probably going to see, unless there's major earnings reports on each particular day, there's not going to be a huge amount of volatility until we start hitting these major reports, the CPI and the PPI. Okay? All right, so that's going to be it for today. Enjoy the rest of your day, and I will see you guys in the after session.